Stocks are attempting to stabilize after 2.5 weeks of falling. Junk that the high yield bonds are testing a first support level. I'll explain what that is. Dollar has entered a new bear market for itself, and as a result, gold hit an all-time high at $3,000. Oil is vulnerable, and if it breaks below the support level that I'll describe, it could hit a $40 range. And we will look at Bitcoin and see if a coming collapse is imminent or not. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, March 14th, 2025. As always, please hit the like button, subscribe to this channel, share this video, make a comment. These actions are what keeps this channel going and helps make this video available to more audiences. If you're a subscriber, stay tuned. We'll be covering quite a bit of various securities because there was quite a bit of selling. And so there are more opportunities, potential opportunities, but we're not 100% obviously if they are indeed, if the market has indeed bottomed or not. So stay tuned. We'll be covering various securities in the members only section, namely market breadth and various ETFs, foreign ETFs, as well as large cap stocks and some of the more speculative securities, including Trump media. Alright, as always, I'm using my proprietary MasterChartsTrading.com price action indicators, for which you can find out more by clicking on the link in the description and following the link to my site and signing up there. We're currently looking at S&P 500 on a daily time frame. So each candlestick is a day's worth of activity, 1 day's worth of activity. So we hit an all-time high on the 19th of February, and since then basically we've been going downhill. Let's look at it on the weekly chart first. So weekly just means that each candlestick is a week's worth of activity, and that's a little bit more telling. So notice this 3 weeks of selling, and this week on Monday we gapped down, and we went as low as this tail at the bottom of the candlestick, but then by the end of the week, by Friday, we kind of rallied. So technically speaking, this is a hammer candlestick, albeit this is a red candlestick, so it's not a very strong candlestick. Usually good, hammer candlesticks are green in color. It is technically oversold, and we are ready to rally. Now, how do I know that? So notice on this chart we see this green, blue, red, and yellow line. So these are my indicators, again, which you can find out more about by going in the description. But notice that we dropped below this blue support resistance line. And normally when we drop below the blue support resistance line and then rally above it, that is when we buy. So for example, previous opportunity to do just that was around October of 2023, so quite a while back. And since then there were really no good opportunities. You can see that we kind of got close to the blue support resistance line in August of 2024, but we never got to it. Now we're definitely seeing significant selling, and we're seeing even a close below this blue support resistance line. So this is a setup. So we have currently a setup. This is on daily chart. So we have a setup to buy. We don't yet have a signal to buy, and the signal will come. It will look like that. For example, this is an opportunity back in October, November 2023, and it looked like this. We saw a drop below the blue line and a close above it. We do have a drop below the blue line. We don't yet have a close above it. So the best thing to do is to do nothing at this point and just wait until we see a more clear picture. Right now, it's neither here nor there, and so we'll just need to wait and see what happens, basically. High yield bonds, which normally move together in lockstep with S&P 500 with stocks, so this is high yield bonds, and down below here we have what's called correlation coefficient. You can see that correlations are very high between S&P 500 and high yield bonds, because this correlation coefficient spends most of its time in the positive territory. So what we're seeing right now is junk that was more resilient. So whereas S&P 500 had 3 weeks of selling, or even 4 weeks of selling, which began in mid-February, high yield bonds actually only had 2 weeks of selling, which began in March of just last week. And currently we're retesting this green support resistance line. We can see the same picture on the daily time frame. So it is currently retesting this first support. I call this first support at the green line. Just looking at this today's candlestick, though, it doesn't look like it's this support test has been done. I mean, notice that today's green candlestick, even though yes, we closed above this green line, but notice this little tail out of the top, a little shadow out of the top, and that usually means that the bears tried, or rather the bulls tried to push the price all the way to the top of the range, to the top of the session, at the end of the session, but the bears were able to at least reverse partially their gains by the end of the day today. So this candle does not look that good, honestly, and I think we will again retest this green support resistance line by the high yield bonds. That is another reason why I'm just not in a rush to yet buy, even though today's candle was, technically speaking, pretty good for S&P. There is a little tiny tail, little tiny shadow at the top, but I don't know if this just doesn't feel complete yet to me. This is purely based on reading of the candlesticks and not really based on any algorithm or anything of that nature. Algorithms are, do we have a low below the blue line and a close above it? Yes, we actually did. There's a signal right there a few days ago on the 7th of March. But again, at that point, I was just completely, just not sure if we want to be buying at this point. So I want to wait and see what happens in the next few days to weeks. If we stabilize here and rally, no problem, we will start buying again. But for now, I want to wait and see, basically. Dollar was really more of a news maker. So let's look at this a little bit longer term first for the dollar. So dollar hit a 2-year high here on the 13th of January after a pretty big rally that started back in September. Now, this candlestick I was already pointing out back in February, beginning of February. Notice that I wrote here topping, and indeed it looks like a very toppy candlestick. So again, why is it a toppy candlestick? Just because of the way it's shaped. So let's again look at this particular candlestick on the 3rd of February. So what happened is we opened where I'm hovering. Sometime throughout the day we rallied very strongly, but then the bears came in and just completely collapsed the prices, and we actually closed below the open. So this candlestick was classic shooting star candlestick. We had a close below the open, we had a huge shadow at the top, and then next day we had a big red candlestick, which meant a confirmation of that this was indeed the toppy top-in candlestick. Indeed, it was a top-in candlestick. We completely unraveled for the next few weeks. And last week it was just a huge collapse. I mean, gigantic. So we closed below this red support resistance line, and then that is our signal to sell the dollar and buy other currencies. By extension, dollar moves opposite to gold, so gold divided by US dollar, and weakness in dollar translated into strength for gold, and gold really shining right now. The high of this week was at $3,004. So somewhere I read, I don't know, a while back that an ounce of gold was considered throughout the ages to be like a good measure of how much, like if you wanted to buy a good set of clothing for let's just say for a man, you need to spend like at least one gold coin, and 1 ounce of gold. So throughout the ages this was true. So if we translate this to today's money, if you want to buy a high quality suit, for example, tailored suit, they cost quite a bit of money, and $3,000 for a suit and a tie and a pants, maybe that's a reasonable amount. I mean, it's obviously not something you'll get off the rack. You will need to have it tailored, but this is basically what's coming to. So inflationary pressures are showing up in the price of gold. So we have right now situations with tariffs which are questionable, and I honestly don't see the whole point of the tariff wars, but maybe you can write a comment and say why we need those tariff wars. Do they actually bring any kind of benefit to consumers? I'm not so certain. I think the prices are going up, even on things like food. The other day I wanted to get some steak and they were like crazy expensive, and turns out that some of that steak comes from Canada. Lo and behold, now we have tariffs on, from them, and the prices are going up. So I'm not exactly sure how the prices will come down if we have tariffs. But once again, if you have another idea, please do make a comment. Also, I wanted to ask if you could make a comment of where you guys from, which country, which city. I would love to hear from you. Please make a comment. So looking at gold, gold is shining. We are buying, gold on any pullbacks. Obviously, you want to be buying around the blue support resistance line, and this has worked just beautiful. And right now, I mean, we're definitely, overbought, but overbought implies strength. So we are in a bull market for gold. Gold is going up. So new highs for gold in a bull market are to be expected. Do we want to sell it short here? I don't know if I want to sell it short. I would be very, very careful about selling gold short. I think, especially with current environment, I just don't see it, depreciating strongly. But for now, I want to be looking to buy. We're also buying gold miners. We're trading gold miners. So if you're a subscriber, stay tuned. We'll be covering a few gold miners. Here's Eldorado Gold, Endeavor Silver, Barrick Gold, B2 Gold, Coeur Mining, and Newmont Mining in the members only section. If you bought gold with my latest alert back in February of last year, so exactly a year ago, then you're up a significant amount. You would be buying at 2,000. It's now at 3,000, so 50% gain. Congratulations. All right, so that's gold. I wanted to touch on oil. So oil currently is retesting price floor around $65, and I'll show you what that price floor implies. oil clearly is in a downtrend. You want to be selling it short. You notice this downward facing arrows that were around January and early February. So if you sold oil short here, then you would have been in a very nice profit. This price floor is around $65. So let me explain why that price floor even a thing. I was looking at this price floor. So we're basically looking at lows from November 2021, from May 2023, multiple lows from September from 2024, and finally right now we're around $65 again, retesting those same levels. So this is a very, very dangerous looking chart if you're an oil bull, obviously. Now, why is it dangerous? Because we can easily collapse through, I'm just going to turn off my indicators for a second. We can easily collapse through this price floor, and normally the way we try to estimate the downside target is by kind of drawing the pattern. So the pattern here that I see is something of this nature. So like we can measure it from this high, and that's, maybe even from this high, and then we can duplicate the same when we go down, but that will put oil in the negative territory, so quite unreasonable. Although oil did go negative for a little while during the pandemic, I'm not sure that will happen again. So let's be very, very conservative. And let's look at a very conservative estimate of how low could oil go should this price floor around $65, maybe $61 be breached. So a very conservative estimate would be to look at this latest high to low between, let's just say, January of this year and now. So it's about $14. So if we breach that level and then continue lower, then we'll hit around $49. And again, that's a reasonable one. But if we take like a medium estimate, from, let's just say, September highs, then that's around $24 down from today's level. So again, we can estimate oil to continue into the low to mid 40s. Again, this is only if we finally breach this support level, and this is pure conjecture, and I'm passing on some of the ideas I heard from another analyst. So currently we're seeing strong diplomacy surrounding Ukraine war, and right now Putin has refused to accept the current offer from Ukraine and the United States of truce of 30 days. So I'm guessing here possibly what Trump administration might be planning is for Trump to go to Saudi Arabia, talk to his partners there, and then increase oil production. So increased oil production would imply more oil in the markets and lower prices. So if prices, if there's more oil in the markets, then price will continue, breach the support level, and most likely collapse to where I was saying, somewhere in the 40s to 50s area. This would undoubtedly put pressure on Russian oil and by extension Putin, because they sell oil and finance the war. So this is the theory behind the current diplomacy effort. I'm okay with that in the sense of it will lead to, obviously, peace and hopefully the end of the hostilities. And of course, if the prices are lower, then consumers will be happier. So this is the oil situation. Let me know what you guys think about that. Finally, I want to touch quickly on Bitcoin. So basically right now Bitcoin is in this state of neither here nor there as well. So it is, technically speaking, in an uptrend, and we've been buying it. Notice again upward facing arrows around the blue line. And the latest price action was very volatile, especially these 2 days here on Sunday the 2nd of March and Monday the 3rd of March. Notice that we rallied strongly above this blue line and then completely collapsed below it. And then we kind of rallied a little bit and then again broke below it pretty strongly and actually made a lower low. So right now it's like we're literally in between. If we continue lower towards the red line, and the red line is at 71,600 or so, that is a bear market for Bitcoin. And let me show you what the bear market looks like, because it obviously has been in a bear market before. And no, Bitcoin is not, the new thing, and it can easily repeat this, what has happened to it before. So this is what the bear market looks like. Very similar situation back in November of 2021. We had a bull market, and then it can, continued lower, close below this red support resistance line, and then basically at that point we need to start selling it short. And we shorted it many times, in the sense of if you had an opportunity to sell it short, and you can do it now because we have now ETFs that hold Bitcoin, so you can actually buy put options on them. It's an option, it's a possibility. And notice that Bitcoin has been in a downtrend for a while, but then eventually, and I can tell you exactly when, right there, on the 15th of February 2023, it broke out into a new uptrend. And from then on, we're buying it. We're buying it, we're buying it, we're buying it. And until very recently, we were buying it as well. Right now, we're not so sure. We're looking at this Bitcoin and it looks like maybe it's going to be rolling over. So we're watching two levels basically, 71,600 and then 86,700. So if we close above 86,700, then we may make a new record. But if we close below 71,600, I think we can easily collapse to like 50,000 or so. Let me know what you guys think about Bitcoin. And that's it for this week's recap. Please stay tuned on how to find me on the internet. Other than that, thank you for watching and have another great trading week. All right, so go to MasterChartsTrading.com, click on sign up for one of the products. So again, I have two products. I have the trading indicators. These lines on the chart, you can have them on your chart as well. These lines are for TradingView.com. TradingView.com is a free interface online. You'll only need to sign up for a free account. Once you sign up for a free account on TradingView, come back to Master Charts Trading, sign up for my indicators here. You can sign up for yearly or the monthly, and I will open the door for you on TradingView.com. If you're not interested in having your own indicators, you just want to know what we're selling or what we're buying and selling. So for example, this week we'll be looking at various securities, such as various ETFs, as well as currencies, market breadth, large cap stocks, foreign ETFs, as well as some of the speculative securities. Then you can sign up for the newsletter. I send out daily alerts and weekly members only newsletters. And of course, the best deal is to get both indicators and newsletters, and all of the plans have both yearly and monthly subscriptions, and all of the plans have a free 7-day trial, so you can cancel within the trial and not pay a dime. But most people don't, because it's very useful to have my indicators. Alright, that's it for this week's recap. Please let me know if you have any questions. Thank you for watching. Have another great trading week. Bye bye.